Rutland is one of the UK's leading turnaround houses. All of the situations that we might invest in involve a significant degree of change, and whether that's of people or operations or the fabric of the business. And I suppose one of the things that Rutland considers itself to be very good at is adapting its strategy for the needs of a particular situation.
We'll look at any situation where there's change to happen to the business and its operations. The start point for that change can be out and out distress, all the way through to the relative underperforming business, so it's profitable, but it could be a lot more profitable if it properly addressed its market opportunity.
One of the key objectives for Rutland is to find and identify businesses which, despite their current circumstances, have real potential 3 years out to have their performance improved. Most commonly that's manifested in a better competitive proposition, market share, or in their underlying financial performance. And nearly always that's based around a range of controllable actions in the business and not on external factors.
Initiatives we might undertake would be capital expenditure, it might be cost out, it might be efficiency programs, it might be strategic or people change. Often it's a blend of all of the above, tailored to the situation we find at the start of any plan. We're not sector focused, so we're looking to understand how the business has a long-term future in that market, and fundamentally we're trying to leave that business in a better place so it'll be attractive to a strategic purchaser when we finish doing whatever the change program is in that business.
Attens is a brand of adult incontinence products produced in Sweden and sold across Europe and ultimately across the world. Our customer base, healthcare systems and mass retail. Key thing has been that Attens is a brand and has the challenge of being exposed to 9 or more European healthcare systems, which have a tendency to change, and in combination with that, strong levels of raw material variability, exchange rate variability, and some large multi-billion-dollar competitors. And the game for Attens Healthcare: beat the competition, beat the raw material cycles, beat the exchange rate cycles, and build value by investing smartly and acutely in the right product assortment, in the right channels to outmaneuver all those constant hurdles that we face.
Attens was a fascinating situation when we first came across it, probably in 2006. It was a business in a very attractive market in terms of demographics. So you had an ageing European population, you had a business with a good brand, a good technically performing product, a strong management team and a clear vision of where they wanted to get to. But you had quite a challenging situation because the business had been starved of investment for quite a few years. So unless the business addressed key product portfolios and segments in its markets, it would rapidly become uncompetitive. And because the lag of investment had been so long, the scale of change required when we first invested was quite big.
Fundamentally what we saw in Attens was the opportunity to capitalise on that brand and on that market reputation by a much more substantive restructuring of the business at all aspects.
We got comfortable with the investment strategy and spending 25 million of capex by spending a lot of time with management before we invested, understanding the markets and the channels.
From day one, Rutland tried to understand our business with the complexities of the markets and the manufacturing process. And in doing so, we're then happy to contribute in the debate as how we managed problems and controllable issues that we faced, and not focus on the issues that were beyond our control.
The Rutland business plan with Attens started with what we called Project Primus. We focused on installing a high-speed, light moderate powered machine, basically something that's complex, fast and difficult to install.
The key to line 15 is it produces a full range of light incontinence products in a way that no other machine does. We can do this by interchangeability of SKUs, and this allows us to do on one machine what other manufacturers do on 5 machines.
The main challenge with Attens was undoubtedly the external environment we faced in the first 2 years of the plan. We had 25 million of committed expenditure, we had a clear strategy we were all committed to following through, and we had extreme volatility post Lehman's and Northern Rock. So raw materials were very volatile. The 4 main foreign exchange indices in the business were very volatile.
We had a significant problem with the machine supplier that we were using in Germany. The intention originally was to have a turnkey project with a supplied line that was already proven and to operating efficiency levels that we were targeting. Unfortunately, they had some financial distress, and we had to effectively bring the machine into Arnaby much earlier than planned and work through those phases ourselves.
The innate confidence of Rutland and management and their ability to analyse and assess problems and address them by the day, by the hour, got us through what was a very challenging but rewarding time. The consequence of the product launch and installing the new machine and working our way through all of these problems in combination with Rutland was that the business was transformed. 20 million euros at least of new sales within a 2-year period, a whole set of new customers, a whole set of new channels, a whole different quality to the base of the customer and to the product mix that we're offering into the marketplace.
Attend is without question a better business today than the one we acquired in 2007.
It's a modern business, a lean business, in control of its supply chain and its cost base.
You can evidence it in the net profitability of the business today, significantly higher than when we acquired Attend.
And with a manufacturing facility that can address a very significant market opportunity and perhaps even beyond the European markets that it has historically served.